Hello, my name is Lauren Goodwin. I'm Chief Market Strategist at New York Life Investments. Each month, I drop in to provide a U.S. investor's perspective of how the markets are developing. And last week, I joined policymakers such as Scott Bessent, investors such as Bill Ackman, industry leaders, and even Nobel laureates at the Milken Institute Global Conference in Los Angeles. It was a great opportunity to see what a lot of US investors are thinking. And as I reflect on what I learned, here are a few of the big ideas that stood out. First, if Davos was all American exceptionalism and positivity, Milken was action-oriented and intense. A lot has changed this year, but investors, entrepreneurs, and business leaders were less focused on what's happening and more focused on what now? What do we do next? And that ambiance reinforced our view that even as US trade policy ebbs and flows, the underlying currents of reglobalization, shifting alliances, and infrastructure buildout are here to stay. These trends will likely change what an optimal allocation would be. Second, industrial policy is back as a policy tool and in a big way. From electric vehicles to defense technology, governments are doubling down on domestic capabilities. Central planners like China are already mobilizing, and so Western policymakers now face a dilemma. Can governments crowd in the private sector investment and innovation without picking winners, which hasn't worked very well in the past? Resilience going forward in this sector isn't going to come from what we make necessarily, but how agile and scalable countries' systems are. So we're thinking that geographic diversification becomes more and more important with this backdrop. Third, US debt dynamics were a big focus of the conference. Investors from all regions were considering the role of US debt in the global economy. And this is important because correlations between the US dollar and US treasuries and other assets are beginning to change. And we're seeing asset allocators globally change their allocations as a result. The downside risk to the US debt dynamic is clear. If confidence in US fiscal discipline erodes in this moment where the stability of policy is already in question, then US borrowing costs could rise, crowding out important business and policy priorities. I don't want to overstate this point because there's still relatively little alternative to the depth and liquidity of the US capital markets, both public and private. But even on the margin, this is changing investors' allocation perspective. Fourth, it could be Europe's moment if it takes the moment. Europe has scale, 500 million people as a whole compared to the US 350 million. But if a German company wants to expand, does it look to France or to the more integrated and risk-tolerant US and China? It's always a question. And so conversations at the conference pointed to an interesting vision of the future with more efficient governance and clearer messaging around the areas where Europe has strengths and success stories, among other things. And everyone was hopeful that this transition of Europe taking up the mantle would happen. Few were confident. For what it's worth, we've been constructive on Europe, both in public and private assets, since Q4 of last year, for cyclical reasons, like interest rates moving lower, and also structural reasons, like were discussed at the conference. In our view, this perspective is still likely to unfold. Even if we see a closing of the global underweight to Europe, for what it's worth, we've been constructive on European assets, public and private, since Q4 of last year, both for cyclical reasons like interest rates moving lower and structural reasons. In our view, this perspective is still likely to unfold in the markets because even if we only saw a closing of what has been a global underweight to Europe relative to benchmarks, the impact for public and private opportunities in Europe is really interesting. And finally, healthcare was a transformative topic of the conference. From AI-enabled drug discovery to gene mapping, innovation is accelerating, and with the right funding, these advances could reshape health outcomes and, importantly, not just government spending trajectories, but also the way businesses evolve. So from our perspective, this is about understanding the biotech system, but also understanding which systems can scale to innovation the fastest. So these are just a few things that I've learned and that I've been discussing with US investors. And look, the US economic environment remains dynamic and not without its risks. Europe has an opening and the global capital market is watching very closely. Thank you for listening, and I will see you soon.